I want to thank you very much for taking the time to watch this video. You know, I appreciate the investment of time that you make to watch these videos week after week, and I hope you find them beneficial. I really want to help you build up an investment portfolio. If you've watched any of my videos up until this point, or if you've attended one of my money machine seminars or read some of the articles, you know I'm passionate about investment real estate. I want you to build up an investment portfolio, I want you to get it paid off, and I want you to enjoy passive income into retirement. But most of what my thrust has been is residential real estate. Now I'm going to be talking today about ICI, or industrial, commercial, and investment real estate. But the reason why I started out with the residential is because I work on the assumption that most of us are novice investors, or we're walking the path, but we haven't been in it too long and we're not too experienced. Well, chances are you don't own a regional shopping center. The chances are you don't own a high-rise apartment building. And so for the novice, it's easier to get your head around residential real estate. Why? Because we've owned it. We own our own house, or at one time we've rented, we've been a tenant, we understand tenancies, we understand ownership of residential real estate, so it's easier to relate to. Another thing is it's easier to acquire. There's houses of all sorts that are very excellent potentials for rentals that are available at any time in the market. Semi-detached, single-family, duplexes, triplexes, all sorts, townhouses, and you can go through an MLS listing. You can go on the internet, you can work with a realtor to help you find these products, but there's lots of them. They're not hard to find in the area that you're looking for. And they require less of a down payment. You can go into a property that's going to be tenanted with 10% down. And certainly if you're going with 20% down, you don't even involve high ratio insurance. But if you're buying commercial real estate, the banks are going to probably want you to put in a minimum of 35% down. And another thing is the interest rate you pay on the mortgage. Mortgage rates have been going up lately, and they've been going up in all facets of mortgages, but there's a spread between what you pay for residential and what you pay for a commercial or industrial mortgage, and the commercial industrial tends to be a little bit higher. So it's a little bit more difficult financially, it's a little more difficult to find them. And another thing is the residential tenancy tends to be much more stable than the commercial industrial. I want you to understand and get this. Our economy is cyclical. We have times when we really have a hot economy. We have times when we don't. And driving along, you can drive by strip plazas and commercial spaces, and you can find a period of time when there's lots of for rent signs, when the economy slowed down. Or like we went through with COVID recently, when a lot of businesses were shut down. And it put all kinds of strains on landlords and tenants trying to pay the rent. And so you get that with commercial tenancies. And when you have a vacancy in a commercial tenancy, it takes you longer to find a replacement tenant. There's always a residential person looking for a residential dwelling. Not so with commercial and industrial. And so you need to have fairly deep pockets if you're going to get involved in commercial and industrial, because you have to carry it during these times between tenants. So there's some Achilles heels, if you like, to commercial and industrial. Having said that, there's some real advantages to owning commercial industrial. I wouldn't want to see you start out that way, your first or second or third property as you're venturing into becoming a landlord. But after you've developed the portfolio, you've got pretty good cash flow, I think it makes a lot of sense to venture into commercial industrial investment in real estate. And I want to share with you some of the reasons why. One of the main reasons is that it does not fall under the Residential Tenancy Act. The Residential Tenancy Act is consumer protection legislation, and it is extremely one-sided in favor of the tenant. I'll give you an example. We had a situation where we sold a property that was tenanted. And there's provision in the Act to give the tenant notice when the beneficial owner, the new owner, requires it for their own use, 60-day notice from the start of a rent period. So we gave them the 60-day notice, and they indicated after a period of time they weren't going to move out in a timely fashion. They decided to buy a property, but they were going away on a holiday, and they wanted to mesh the closing with their holiday, not with the eviction period. And so they were supposed to be out the end of June. They decided to close on the other property the 21st of July. So they said, we're not going to move out till after the 21st of July. But here's the thing. They contacted the Residential Tenancy Board, ran the situation by them, and the board says, oh, you don't need to move out. It'll take them months to evict you. So here's the board that's supposed to reinforce the Tenancies Act saying, you can break the law, you'll get away with it. That's the Residential Tenancies Act. Residential Tenancies Act can tell you how much you can raise rent if the tenant stays from one year to the next, and it's generally less than the cost of living. It can tell you under what circumstances you can evict the tenant, and that's very limited. It can tell you the composition of who is in the unit and all kinds of restrictions that it can give you. Not so with the Commercial Tenancies Act. Commercial Tenancies Act, at the end of the term, the landlord or the tenant can elect to terminate it, or the landlord can elect to renew it if the tenant wants to, and they can negotiate the rent at that time. It isn't just a small percentage of what was done. There's all kinds of balances between the landlord and between the tenant. Another real advantage is that, generally speaking, commercial tenancies tend to be longer. With a residential tenant, usually 1 year, and at the end of 1 year, we go into a month-to-month overholding or sign them up for another year lease. One of the things as a landlord you hate to see is a tenant move, because you got the hassle of re-renting it, you got to orchestrate trying to show it while the tenant's in there, which is often a challenge, or waiting till they move out, and then you're going to lose a couple months' rent. Then you've usually got to spruce it up. There's some painting to do, some decorating to do, things that need to be done in the unit. So you hate to see a tenant move. You want long-term tenants. But in commercial tenancy, it's not unusual to have 5, 10, even 20-year leases in place. And if you've got a good tenant who's secure, he's not going to go bankrupt, he's staying open for business, and if you've got a commercial tenant that's a long-term tenant, you can really breathe a sigh of relief. You may have had some carrying time before you got him in there. You may have had to spend a little bit of money adjusting the space before he moved in to do some tenant improvements. But once he's in, it really is a blessing in terms of long term. Another advantage is that the leases tend to be what we call triple net or net free to the landlord. What we mean by that is the incidental additional expenses are generally borne by the tenant. We have what's called base rent, and then we have what's called additional rent. Additional rent might be called TMI, taxes, maintenance, or insurance. And what it is all your additional expenses, either the tenant covenants directly, where he signs it for hydro, signs it for gas, and so on, or the landlord passes them back. And by that I mean snow removal, lawn care, exterior maintenance, hydro for lighting and common area, all these things, your insurance, your taxes, all these things are charged back to the tenant. The landlord, when he gets rent, can really see his gross rent being his net rent because the tenant pays for these additional expenses. Another thing that's a real advantage is, for the most part, your tenancy relationship is hassle-free. I have a number of residential tenancies. Got a phone call from a tenant the other day. He said, Wayne, I was making breakfast, I burned the toast. He said, when I burned the toast, he said the smoke activated the smoke detector, so I took it down, took it apart. When I went to put it back together, and I shorted it out, and it won't work. In other words, Wayne, can you fix it? Well, you could say I didn't burn the toast, but first of all, under the fire retrofit legislation, the landlord's responsible for these smoke detectors. Whether the tenant burnt the toast or whether his kids took the battery, it's the landlord's responsibility. And also, I try and be a responsible landlord and look after these things. Get a phone call from a tenant, and they say, my toilet's blocked up. Well, again, that should be the tenant's responsibility, or a tap's dripping and the drain's dripping. I'm going to send a plumber because I don't want it to be damaging the cupboards down below. So I'm going to look after these things. Under a commercial tenancy, you don't get those phone calls. If there's a problem, the tenant understands that he needs to call the tradesman, he needs to fix them. In fact, he needs to do the major renovation. If he wants to do tenant improvement, walls and carpeting and so on, that's his responsibility. Now, there may be some that the landlord assumes, perhaps the HVAC, perhaps the parking lot. He may assume some of these, but they'll be spelled out in the lease and it'll be clear who's responsible for what. So it really is an advantage there. Now, one thing I will say, though, is if you're going to adventure into commercial industrial, and I encourage you to do so, use a real good, competent realtor. You need to know things like vacancy rate. You need to know the standard rent. You need to know site specific. In other words, you can buy a property that's just a cube that you can rent out in a strip plaza, 4,000 or 5,000 square foot strip plaza. It's very easy to get a tenant. You can get a site specific one that's perhaps a restaurant, and if that restaurant closes down or doesn't renew their lease, if you can't find another restaurant, you may have a difficult time putting another tenant in there. So you need to know what the demands are, what the typical rent is, all these sorts of things. And the other thing, as I mentioned earlier, a lot of the real good commercial, industrial, and investment properties aren't listed on the MLS. And so you need somebody who's in the game, who knows what's going on, who knows the players, who knows the product, that can guide you. But having that guidance, that direction, and that level of expertise as being an investor, I really would strongly encourage you to add commercial, industrial investment into your portfolio. Thank you very much for taking the time to watch this video. I hope you're enjoying them. If you are, take a minute to share them on Facebook. Take a minute to go over to YouTube and subscribe, and we'll look forward to talking to you again next week.